gentlemen, welcome into my screen. As you can see, very simple, very straightforward. We have a clear chart here. The essence of this video, like I told you guys in the beginning of this video, was to actually go, dive deep and review all the things that made me a lot of money this year and all the things that made the Forex traders, rather the Forex mastery students, a lot of money this year. And I'm also going to be touching on things that we didn't do exactly so great this year so that we can learn from it and never do them again next year. Like I said, fantastic trading year for me. Once again, I think I was right 99% of the time. Okay, 95% of the time. Only one trade got stopped out for break even. AUD USD gave me a little bit of a headache, but the S&P 500 was absolutely amazing. But before I jump into the nitty-gritties of this video, two things. Ensure that you have grabbed the Forex Mastery Program so that you can understand and digest what I'm saying very well. It's just $99, guys. Grab it so that you can, if you watch this video, you understand the review, and then you take the course, everything will make absolute sense to you. I don't understand traders who would rather deposit $1,000, $2,000, $5,000 in their trading account, but to bring up $99 to buy a course that will change your life, they will never do that. It's penny wise, pound foolish. My father always used to say, sharpen your axe, sharpen your sword before you go to the battlefield. This way, it makes fighting easier. In this case, get the Forex Mastery Program so that you're sharp enough to take on whatever thing it is 2025 has to offer you. So guys, anyways, enough about that. Let's jump into my trading. Also, one last thing, ensure to subscribe to the YouTube channel as well so that you don't miss out on stuff like this. Okay, so back to what I was saying. Now, I want to kick off with my most favorite pair, the one that made me the most amount of money this year, which is in front of me, is the S&P 500. So a lot of people shy away from it, and I don't know why, because this is one of the easiest things to trade. The S&P 500 ensured that I was trading less and making more money. Okay, the S&P 500 probably netted me about $60 million this year. It was crazy because for every pullback that I saw, I jumped into it and it made me a lot of money. So as you guys know, using the top-down analysis, simple, straightforward, we start from the monthly time frame first. Now, as at the time I started to buy the S&P 500, this bullish move, the market was trading somewhere around here. Now, with the help of the top-down analysis and what I teach on the Forex Mastery Program, Forex Mastery students, you already know this. This market was making higher highs, higher lows, higher highs. This was a higher low you had put in. And then we had pulled back. All I needed to do was, I took my Fibonacci from swing low, okay, Fibonacci from swing low all the way to swing high. Now, at the time, okay, the market was trading somewhere around here. This is exactly where the market was trading at and all that. So I wasn't ready to buy. I wasn't interested in buying, and this happened towards sometime in 2020. I think probably towards the end of 2023. Okay, and I need to give you guys some background story to this as to why I jumped on this trade and how it has gone on to make me a lot of money this year. But the move did not start in 2024. It actually started in 2023, and I predicted it here live on my Trader Talk videos. For those of you guys who are doubting me, feel free to watch the previous episodes. Now, what was my rationale as to how was I able to predict that the S&P 500, guys, this thing has gone on to rally almost maybe 3,000 pips, if not more. How was I able to understand that this was going to happen? It was simple. I saw this bullish momentum to the upside and I started to see this crazy pullback. Simple ABC pattern. I took my Fibonacci from swing low to swing high. I waited for the pullback. You have to understand that I don't give a shit about fair value gaps. All of that, all those things don't work. I believe in trend, the structure of the trend, because why? The trend is your friend. If the market is going to go higher, it would let you know. The market goes higher by making higher highs and what? Higher lows. I'll repeat again, the market goes higher by making what? Higher highs and then higher lows. So that's exactly what I looked out for. We had pulled back. So the first sign of this was the Fibonacci bounce. We bounced off of here. At the time, I was still a bit, I wasn't exactly sure. And then we started to push all the way to the upside. I felt I had missed out on the trade until we got here and started to retrace. Now we got here and started to retrace. I was like, aha, now I'm done with the monthly time frame, because the monthly time frame has showed me one thing. Higher high, higher low were pointing to the upside. This market, 95% it was pointing to the upside, okay? Higher high, higher low were so monthly time frame shows us the overall direction, and the S&P 500 has already done that. Went over to the weekly time frame. Now on the weekly time frame is where I look out for chart patterns, okay? For example, S&P 500 already said we're going north, right? It's heading north, we're going higher, all of that. guys, I'm showing you guys my thought process as to how I went on to make $95 million this year. You need to listen. Listen, bro. Listen, okay? Now, on the weekly time frame, I come out to look out for chart patterns within the overall trend. And as you can see, I zoomed in, okay? From what I could see, first of all, clearly this was a resistance bar somewhere around here, okay? That was fine. However, when I zoomed in pretty nicely, I started to notice something. I could see a left shoulder, head, and right shoulder. Now, this is an inverse head and shoulder pattern. What does an inverse head and shoulder pattern do? Simple. An inverse head and shoulder pattern pretty much tells us that the market is about to go what? Bullish, higher. What? Higher, okay? So that started to make sense. I'm like, all right, cool. If that is the case, that means if this is the left shoulder, this is the head, this is the right shoulder, that means this is the neckline, right? Cool. Now, this being the neckline, simple and straightforward. The market pushed all the way to the upside. Forex Mastery students, you know that I think in module 7 when I talk about chart patterns, we know that we don't buy or sell at the breakout of the neckline of a chart pattern. First of all, chart patterns are very reliable. If they play out, they work 100, not 95, not 99, 100% of the time. Forex Mastery students, we all know that when we have a breakout from a head and shoulder pattern, we don't buy here. We wait for a what? Retrace and a bounce. So once the market started to come here and we started to retrace, people who bought here were panicking. Oh my God, it's coming back to my entry. But Forex Mastery students and my humble self, Dapo, always, we were ready. We were expecting the pullback. So what did I do? What did we do? Simple, ladies and gentlemen. Fibonacci. We looked at the most immediate swing. As you can see, we've seen the overall flow, the overall swing. Once we've identified the overall swing is heading here, we come and look for the immediate swing within the overall swing. Simple. This was the swing, and as you can see, ladies and gentlemen, A, B, not only did the market pulled back into what was resistance, had now turned support 1. This was also the neckline of the head and shoulder 2, and this was also in confluence with the Fibonacci as well, which was making it 3. And I'm pretty sure if I zoom out properly and I draw my trend lines pretty nicely, you should see something like a Willis zone bounce. So for me, while the market was trading somewhere around here, okay, while the market was trading somewhere around here, I was very confident. Once we came into here, ladies and gentlemen, what is the entry strategy? The entry strategy that I use for here, and don't forget, I don't execute on the weekly time frame or all those higher time frames, they're too heavy. I like to come and execute either on the 4-hour time frame or the 4-hour time frame or the daily time frame. These are my entry points, okay? So what I did was I started to look out for the chart pattern that was forming around here. Let me delete this so that all of this doesn't confuse you guys. So now you can delete all those things. Delete. Come back and keep it simple, one line. We've seen what we need to see. Keep it one line. And as you can see, all I did was keep the support level here and I waited for the bounce. Ideally, what I do is I look out for, see, guys, you have to understand that trading, profitable trading, is your ability to use all the different things you've learned as an arsenal, okay? Their ammunition. You bring them out to help you build a case for entry. They help you build a case as to why you should be in a what? A trade. Simple. Now, what I did here was, you can see how we have bearish, bullish. If you're watching this right now, if you can guess why I entered this trade, just comment down below before I say it. Drop a comment down below. The winner gets a prize. All I did here was I simply used what they call candlestick patterns. The problem is people want to use all these individual market ideologies, Elliott wave. They want to use them individually. That's not what it's used for. You have to use them in a systematic way. You can see how I've used trend analysis, how I've used trend line, I've used Fibonacci. You know, I've used these things, and now I'm using chart patterns to refine my entry. And ladies and gentlemen, I waited for the first bounce. We know from we know from a candlestick perspective, this is a buy. If you read baby pips very well, we know a bounce off of support from this kind of candlestick formation, we buy here. So it was simple, just jump into the buy. And ladies and gentlemen, that's exactly how, actually, I didn't buy here because the truth is I was busy. I had other things to do, I was busy. So my buy was somewhere around here, okay? And also I was trying to make sure that we were able to clear this bad boy about here. I didn't want us to get here and drop. So once we cleared here, bullish engulfing candle close, I bought and I held this trade. And as you can see, oops, sorry guys. And as you can see, the stop loss is, I mean, this was, I think my stop loss was probably, I think maybe about 120 pips or maybe less, maybe 80 or 100. I think it was about 80 pips. But most people are going to be like, oh, that's too wide. Guys, I was gunning for the big shot. Look at this. Look at this RR. Okay, let's look at this RR. I was gunning for the big dog. I had a 4.71. I had a risk to reward of 1 to 4.71. Like, that's absolutely huge, guys. So what actually happened in this case was, for every $100,000 I was risking, for every $1 million, or for every $10 million I put into this market, I was going to make $47 million back. And one thing about me is, you have to understand, guys, I trade a lot of money. That's one. Two, at the end of the day, this is a fantastic risk to reward, and I didn't need to stress myself. Once I clicked the buy, the market was going. Now, guys, what you don't understand, that this was just the first profit target. The overall profit target, and this is going to take me into why I've been trading S&P 500 for the longest time. Now, let's look at this. If you are a Forex Mastery student, you would understand what they call using the Fibonacci extension to set your target. This was actually just my first level target. My second level target, okay, was actually all the way up here. Let me adjust this pretty nicely. My second level target was all the way up here. What is that, guys? A risk to reward of 9, okay? 9 to 1 or 1 to 9, whatever thing it is you call it. Meaning that if I was risking $100,000, I was making $900,000 back. If I was risking $10,000, I was making $90,000 back. If you guys are trading, basically what it's trying to say is, with your $1,000, you can make $9,000. This is how you... think about it, guys. You have a 10K account, okay? You're risking 1K out of your 10K account. Still keeping your risk low. Still keeping your risk low. I know why I'm the best Forex trader on the African continent. I know why they call me the #1 Forex trader on the African continent. I know why they call me the richest. It's because of stuff like this. I know how to flip an account while keeping your risk low. I'm not against flipping accounts. I'm against flipping accounts at the detriment of your risk. The idea is, you want to get a big, massive trading opportunity, but keep the risk low. This way you can sleep well. Now, not only was I able to score, first of all, and don't forget, guys, there's several trades I placed within this whole move. The first one was a 4.7 to 1, and the second one was a 9. Huge. That's, by the way, done with this. By the time the market got here, and what I usually do is I close a portion of my trade out here and I allow it to run all the way to the upside. So guys, by the time we got here, what was happening is I was done trading this, to be honest. I was done and all that. I'd made a lot of money, blah, 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 and the market pulled back. Now, when this market pulled back, I started to be interested again. Okay, and this is exactly what now brought us into my trading year so this was about April of this year, 2024. So in this trade probably carried on from October of 2023. I didn't need to do anything. I just kept on adding. Now, two strategies that I used to jump into this trade, by the way, let me quickly say it. Candlestick entries for around here and counter trend line for those of you guys. Although this gave a pretty wide entry, but stop losses will go somewhere about the previous low, somewhere around here. So it wasn't that deep, okay? Below here. So it's simple, guys. I know I'm putting this on a weekly time frame so that the candles are smaller, okay? So ideally what happens is we break out, so a breakout, retest, continuation. So your stop losses coming up below here will give the market enough time to pull back without stopping you out and carry on going to the upside. So first entry here, I had another second entry here. See, I'm stacking. Okay, trying to explain to you how and why this money came about. I explain everything live on the YouTube channel, Learn Forex with Dapo Willis. Everything is there. I explain my entries, my exits, and what I was thinking at the time. This is once again a review. When I'm done with this, I'll go to AUD/USD and explain to you guys what I didn't do really well on AUD/USD and how I was able to recover from that as well. So by the time we came into I wasn't doing that much trading much of this year, and this is why I can say I wasn't trading much, because the market was making so much money for me. I was busy building a prop firm, I was busy flying around the world in a private jet, I was busy doing other stuff. The market was, every day I wake up, green, 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 one red, green, green, green. It was just stacking. And then we had this pullback. I was like, okay, cool. This is the Fibonacci extension. We're going to pull back into here. We came here, the market didn't pull back into here. What happened was the market came here and the market was like, yo, Daps, I'm not done with this bullish momentum. And now this is where things started to get really cool. So I took my Fibonacci once again. Okay. Now, once again, guys, I trade on the daily time frame. This is where my entries and exits go. So now I'm zooming into the inner trend, and as you can see, we had this fantastic pullback. Okay, we had this brilliant pullback into here. I looked at them like, guys, this is 50 Fibonacci again. The market now carries on and makes a higher high. I'm like, okay, this high looked a bit equal to this one, like the S&P 500. So this high looked a bit equal to this high. So I'm like, okay, cool, double top, and we're gonna come. Guys, we just kept on going higher. You know what? By the time I looked at this market just go all the way higher, I was just like, fam, this market has put in, technically this is a high, this is a low, this is a higher high, this is a higher low, this is a higher high, and the difference between these highs are so far. I'm like, no, I'm going back. And that was when I was just like, all right, cool, let's see what S&P 500 has to offer us. And then obviously you guys know how I like to operate. Fibonacci starts jumping out from swing high to swing low. And as you can see, we pull back into this candlestick pattern to the upside. All I needed to do was come and earmark this resistance turn support. This is demand zone. We came in here, Fibonacci aligned everything, and what happened, guys, let me just move this. We bounced off of here, candlestick, bullish engulfing candle, buy somewhere around here. And guys, I just held on to this trade for dear life. And as you can see, all I did, now I just want to quickly explain to you guys so that I can run the S&P 500. All I did, ladies and gentlemen, right, was to just catch the wave. Okay, so I bought here, we pull back here, I bought here again. For every major pullback, I've just been stacking on what? The S&P 500, ladies and gentlemen. Although we've come to the end of the year, I've had to close out almost 95% of our S&P